All right. Good morning, everybody. Welcome to today's bi-weekly Gentian updates. We are glad that you are with us today, and those who are viewing it later, we appreciate your time that you spend listening to the message. We appreciate that very much. We appreciate all of you. What a wonderful start to fall. It sure feels like it. Leaves are starting to change everywhere. It's a time of season. Changes here with a lot of things right now. So as you guys know, we're going to have a great presentation today. We're going to go through Zach's facts. We're going to go through Mike's minutes. Jenny is going to do the Gentian happenings at the end. So we're going to hear from a lot of our team today, which is fantastic. A lot of different perspectives, which is fantastic. So I just want to say thank you all. And here we are. As you guys know, we like to go big. So we're going to start off in beginning gratitude. Get our mindset in a wonderful spot, focus on the positives. There's a lot of things that are going on in the world right now that have a perception to be a little negative right now, whether it's people, whether it's the markets, as we know, temporarily, right? There's a lot of things that are going on right now that really force us to go back to the fundamentals. And if we focus on the fundamentals, like beginning in gratitude, the rest really will take care of itself if we have that patience and that faith and that discipline as we go forward. So with that being said, we'd like to go big. First of all, we haven't heard from Jenny in a while. So Jenny, I know you're on the webinar today. So if you'd like to kick it off by going big, We'd appreciate that.
Yeah, absolutely. So my gratitude is just, obviously, it's for my family and my kids. This morning, they came to me. The school is having a coin drive to help pay for families in Washington County who have trouble covering healthcare and dental. So I got the email from the school yesterday, and I wanted to see if the kids brought it up to me, and they did. So I thought that was great, and they dumped their piggy banks out this morning, and we were able to put together a little donation. So I thought the lessons that they're learning at school, I just have gratitude for the teachers and, putting that sort of lessons out in front of them.
That's great, Jenny. I mean, some of those, like, again, going back to the fundamentals that we just talked about, right? That really is a true fundamental piece to just being a good person and helping others. So that's really good, Jenny. Thank you for sharing. Appreciate that. Zach, how about you? What are you grateful for these days?
Yeah, thank you, Ken. I appreciate it. I'm grateful for patience and perspective today. So 2 weeks ago on Saturday, I completed a 100-kilometer run, or about 62 miles. And the original goal was to go 200 kilometers and 125 miles. So I'm grateful for patience and perspective, because normally I think in my past I would have been very disappointed of not reaching the original goal, but kind of based off of the sand as what we were running in on the trail, the heat that day, and also that my dad was out there for 15 hours and has kind of a sciatic issue where sitting down was in extreme pain, and my friends Jess and Aaron that were there would have been out there all night essentially running, and it was the perfect time to call it, and not the time to get triple digits. And I think without the perspective that I've gained since I've been here at Gentian, and just through life, through wisdom with each of you, I don't think I would have viewed it the same way, and it happened perfectly. So the patience and perspective gained since being here almost 5 years now is just extremely humbling, and I'm extremely grateful for it.
That's great, Zach. Well, by a lot of people's standards, running 67 miles still is a heck of an accomplishment, and maybe the finish line for a lot of people. So I know maybe not for you, but again, we appreciate your perspective on that, and your grit and determination, enduring all the things that we talk about here. You really exemplify all that. So we appreciate you there. So Mike, how about you? What are you grateful for?
Thanks, Ken. So yeah, Ken actually just said it. I'm grateful for Zach getting perspective, because if he wouldn't have made it back from that 100-mile race, we would have been, we would have made it, but it would have been a whole lot more difficult. So I know all the clients out there who work directly with Zach are very appreciative of that too. As great as I am, I could never fill his shoes. But no, seriously though, what I'm seriously grateful for is Raymond James. We don't talk about them enough, and the work that they do for us behind the scenes when it comes to getting things approved, getting things taken care of, making sure we stay compliant, not just saying that because compliance will be watching this, but really everybody, it goes out to them. They take such good care of us and the things that they do to make sure that we can serve you all the best that we can. And I also want to just share that, Raymond James home office is in St. Petersburg, Florida. And with Hurricane Ian bearing down right now, they've evacuated the home office, and but they've taken steps with a business continuity plan where we're going to be serviced by people from Memphis, different areas of the country. So they've taken every step to make sure that we can continue to service you the best that we can. And our hearts go out to all those individuals at Raymond James and anybody who's going to be affected by the hurricane.
Yeah, very nice, Mike. We appreciate that. And yeah, that's a good point with the hurricane bearing down a lot of people, evacuation, changing people's lives really because of Mother Nature. So I see that Chris is with us as well. So Chris, I see that you have a new surrounding around you. So if you'd like to let us know what you're grateful for, we would appreciate that as well.
Thank you very much, Ken. I appreciate it. I'm grateful for endurance. I'm grateful also for perspective, family days. I'm grateful for the fall and reflection. I'm grateful for progress, patience, for continual learning. I can keep going on, but I'll stop there as my list is extremely long. So I'm grateful for all of you on the call as well. Grateful for weather, patience, prayer. Thank you for all of you who really are praying for those who are in need right now in the hurricane, because it is going to be a doozy from what they say. Thanks, Tim.
Absolutely. You bet, Chris. So yeah, so thank you, Chris. We appreciate that. We know you're always grateful for a lot of things. So mine is pretty short and sweet and simple. It really comes down to family traditions, bringing, again, back to the fundamentals. I kind of mentioned that a few times. And, it's like apple picking going on right now. You got some pumpkin picking coming up. Again, bringing the family together, bringing your families together really is that fundamental piece. So really grateful for that as well. So a lot of people moving in a lot of different directions. We're all so busy, but if we simplify our lives, the financial aspect of things as well, typically we have a better outcome when that happens. So with that being said, I know Chris probably has some words of wisdom for us and some market perspective for us. So I'd like to hand it back over to Chris, if that's okay.
Sure. Thank you, Ken. I appreciate it. So there's been some frustration lately with markets. I actually read something in the newspaper that said buying on the dips doesn't work. I read that on the newspaper. I had to read it twice. Buying on the dips no longer works. Well, that actually is predicting some future that's unknown. So it's funny when you see this catastrophist media going on, just talking about things such as, hey, the stuff that always has worked doesn't work. Well, you got to give it time. Historically, it has worked in the past. Most likely it always will. Although we don't know when this ends. This is a movie that we don't know the ending to, but it will probably be similar to most of the plots and things we've seen in the past. The markets have a normal flow just like life. Has life always been happy? Life always on the ups and only ups? Probably not, unless you're on some substance that we probably don't all share. It's actually something that we look at, the natural flow of markets, this kind of recession, this sort of the talk of downturns, the natural flow of interest rates being up and down over time. These are all natural flows. These are things that we've seen over time. And I'm fortunate enough to have been through 3 recessions, probably 7 bear markets with you, and really gain perspective on them, more importantly, because I study them. I study how we feel when we're in them. I've got friends who've been through 9 recessions, and we talk about these kind of things. And the goal of this is to bring you perspective. We choose to continue to do this to learn to get better, to go to tax programs, to bring you perspective in times like these. These are times of endurance. I talk to other advisors with their clients and see what their perspectives are. They're getting a lot of phone calls because they haven't done the work that we've done and the learning that you've done about recessions and markets. If you're new to us, this is your first one. Here's an introduction. This is Bear Markets 101. This is real. This is 9 months. This is not the quick bear market of 3 months and then a 6-month return where it just flips away. That was more of an aberration. This is real. This is endurance. This is faith, patience, and discipline lived. I want to bring that perspective. I know interest rates are there. We have an interesting strategy where we've got floating rate bonds, where we're now looking at moving to normal bonds because we're getting to 4 to 5% return on government, 4 on government bonds, 5 or 6 on some corporate bonds, which now puts them in a range where they're fixed income we can use again rather than 1, 2, or 3%. So it's a very interesting time. There's a lot going on. We're doing a lot behind the scenes preparing for this. One thing I want to prepare you for as well in perspective is, even though the markets are down and may remain down for the year in the next 2 or 3 months, you will still have capital gains distributions. I want to make sure you know that, you're prepared for it. I know we're going to get questions because we won't remember it, but even in down markets, especially after a run like we've had, there are still capital gains to be distributed. We'll do our best to mitigate those, but don't expect because it's a down year equals no capital gains. The no capital gains are typically in the first year of an upturn after a long downturn. Anyway, I just wanted to offer some of those. There's a whole bunch more I could go through. I'm very excited about what's going on now because it really cements our patience. It really cements our faith. This too shall pass. Not only shall it pass, but those of us who continue to remain will prosper. So I mean that in the sense of our plans are evergreen. Our plans are continual. The markets are the things that fluctuate, not our plans, not our getting in and out of the markets. So with that, I'll step off my soapbox here. I appreciate your patience with that as well. But I really want to bring perspective if I can. If that's helpful, fantastic. I've got a lot more. I'll probably be breaking up into segments on videos you can watch in other times. But I want to bring you some of those. I've got some wonderful, wonderful charts to share with you too over our programs over the next couple of weeks here with our quarterly, or I guess our fall forum, if you will, coming up. But with that, I'd like to bring it over to Mike's Minute, which is actually also sort of Zach's Facts at the same. Mike's Facts, Mike's Minute. We have to rename that one. But let me bring that one over to Mike, if I may.
Let me just pitch a rename: Mike's Market Update.
Fair enough.
All right, Chris. Thank you. So just going to run through kind of what the indices are doing year to date. S&P 500, and remember, these are all temporary down numbers. Up numbers are temporary. The market moves every single day, as we all know. But temporarily, the S&P 500 is down 23.48%. The Dow Jones is down 19.82%. The NASDAQ is down 30.78%. And then the Russell 2000, those small cap funds that are out there, or small cap companies, as I should say, is down 25.96%. On the international side of things, the international index is down 28.88%, and emerging markets down 27.61%. So between the 2 weeks since last time we spoke, the markets have fallen, with the outperformer being the S&P 500. On the domestic side of things, growth has actually outperformed value in the last 1 month period, with value still outperforming year to date by a significantly wide margin. Looking at fixed income, the 1 year and 10-year treasuries are actually both at 3.82% right now. When we talk about some of the things that we're doing behind the scenes and, coming into the Mike's Minute part of things, I had a bunch of really good conversations with a lot of fund managers recently. As Chris alluded to, we're taking a look at, what is this the time to get into, higher quality debt, as in, those investment grade bond funds, where the strategies that we've used in the past, they've held up and they've run their course in certain circumstances. Everyone's strategy is different. So it's something that we're starting to look at and we'll continue to bring to you going forward. But in those conversations, I've learned a little bit about kind of what's going on, and I actually have some interesting things to share. So consumer credit card debt, as in a situation like this, is rising at a historically high rate. That's to be expected with the inflation that we've had. The Fed is raising rates, which is raising that variable credit card rate. So existing debt is now increasing faster than it did before. There's a lot of things adding up into it. And another one is that we can finally start buying things again. That being that the supply chain is starting to work itself out. Products are now back in stock. So much so, Amazon Prime is doing a second Prime Day. And I've been told that there is potentially going to be a really good Black Friday coming up. So we'll see where things go, but inventories are high. They're going to be trying to look to unload some of those to bring in new products. So we'll see where things are going as far as the consumer is concerned going forward. Thank you, Chris.
Thank you, Michael. I appreciate it. A couple of things as well, kind of to add to the Mike's Minute and Mike's Market Update, whatever we're going to end up calling it. It's debatable. We'll take a vote. But I want to add, there's been a pattern that's occurred here. It's called the double bottom. My former partner used to call it testing the bottom when we talked about this all the time. We talked to thousands of technical analysts over time, but about 3 made some sense. A double bottom is a chance where the market hit a low and it has to retest that low before it moves upward. There's a lot of institutional investors that have been waiting for this time. We know it's frustrating time, but this is where the last people will get a phone call from somebody absolutely amazing who we've never thought would call, going, I have to get out of the market. And we haven't had a ton of those. We actually have had very few of those at all. So I want to be very straightforward. There's double bottom actually does bring people out of the market. Typically not ours, but we'll get a call asking about that. And that's super important because that's an inflection point oftentimes of frustration and others to hit the maximum fear where people then do silly things. They've been doing that all the way along here, but I wanted to share that with you as well. We've had a hawkish Fed, as Mike mentioned as well, which has caused something which we could celebrate. Anybody here want 2% money market? Oh my gosh, it exists. There's money flowing into money markets now for actual return and a 2% money market. I think it was with a City Prime. There's just one that they noted and I saw it and going, oh my gosh, that's absolutely amazing. We haven't had that in a very, very long time. The inflation that we're all seeing as well is beginning to die down. Now it is higher than it was, but there's actually discussion and talk with some of the people that we follow. That's only about 5 different economists of potential deflation post this hawkish Fed raising rates, because if they crimp consumer demand heavily enough, prices actually go down. Oh my gosh, watch Amazon Prime, watch for bargains on outdoor furniture, watch for bargains on all the things that they were producing that they thought they could never produce enough of, but now they produced way too much of. Because the sword is double-edged. It goes both ways, if you will. Think on the consumer credit card debt. We know that's been something out there, but if you look at the household in America today, the average household's net worth in America today, it's off record highs, but it is in one of the best shapes it's been in forever. Now I'll stop for a bit here. I want to bring over Zach's facts, because he's got some wonderful things to share with us as well. Zach, what do you have to share with us today? I know you got a couple charts.
Yeah, thank you, Chris. We'll kind of just go through historical perspective and kind of answering the question, has a start of this year ever happened before? Have we had a temporary correction to start the year like we've had? Also, we've talked about small size companies, mid-sized companies over the last few years, and found a couple interesting charts to show how they're below valuations and kind of the outcome historically of what has happened when they're below valuations. And then also kind of just a look behind the scenes of things that we're doing with our centers of influence and things that are coming up there as well. And one thing that Chris mentioned that we've been hearing about too is during times like these when fear is high, beware of products or certain things that are trying to get you to lock in certain rates. We've seen kind of an influx of ideas of indexed annuities where they're guaranteeing that you don't lose more than 1%, but they cap your return at 5%. If we're temporarily down 10, 15, 20%, we don't want to cap in a 5%. We don't want to lock in a 5%. We want to get the upside potential. So just be aware of people preying on kind of fear right now as well as far as products go. But I'll pull up a chart here for you guys. Ken, Mike, Chris, can you see the chart?
Yes.
Perfect.
Yes.
So this one was just an interesting one that we saw from PGIM the other day. So this is only the 6th time since 1926 that the S&P temporarily has gone down 15% or more in the first half of the year. On each prior occasion, the S&P 500 has rebounded in the second half of the year by 27%. Now we have an outlier during the Great Depression of 62. So if we're looking at kind of a median, we're looking at 15 to probably 20% in the second half of the year. So it's not saying that the next 3 months we're going to have a 20% return. We can never know that or assume that, but it's just the idea of when we have a quick market correction in the short term, the spring tends to compress and releases at some point, whether that's 2 months from now, 3 months from now, next year at some point, or even potentially longer. It's just the idea that when markets do correct, there is a good outcome eventually. So this was an interesting one to see that this is only the 6th time since 1930 that we've had a 15% decline half the year, but pretty strong returns the second half or 6 months out. The other one that I just wanted to touch on briefly, and we're having our economic forum next week, which we're incredibly excited about with all these different charts and everything to share, so we can go into more detail then. These are just kind of higher level of just the things that we're seeing. And oftentimes we look at a diversified portfolio, and the smaller sized, mid-sized companies, when we have market corrections like this, they tend to temporarily go down further. We wanted to see in historical means, when has that happened? When have they been undervalued relative to large size companies? And in the 9 times that small and mid-sized companies have traded below their long-term relative PE since 1998, they actually outperformed large caps by 12% in the 12 months after reaching their valuation spread bottom. So if we look back in the late 90s, early 2000s, it occurred at that point, and then again in right about now. So it's just saying that this is the beauty of rebalancing and not guessing or assuming what is going to occur moving forward. This year, we're unbelievably excited about rebalancing. When markets are straight up for 10 years or pretty close, rebalancing tends to reduce risk, right? Because if things get out of balance because they're doing so well, trimming back on those each year reduces risk. But during times like these is where it also maximizes return in the long run as well. So if any rebalance that has occurred this year, it's been buying large cap growth, our Microsofts, Apples, Amazons, Googles, etc., and also small cap growth or mid cap growth. So we're hoping to see this at some point. We don't know when it's going to occur, but it was really interesting to see the historical perspective with it, that when it does occur, those small and mid-sized companies really outperform other asset classes. With that, Chris, I'll pass it back to you.
Thank you, Zach. That's wonderful perspective. Looking at a couple of things as well, SMID growth, he said, is undervalued. Another category that's heavily undervalued is emerging markets. Emerging markets and international tend to get slaughtered when the currency is moving against them. The US dollar's been strengthening for a very long period of time. Matter of fact, has anybody here traveled to Great Britain? Oh, wait, maybe Lisa has. The whole point is right now the dollar is not just at parity with the euro, it's actually under. So I remember one point when I traveled for my honeymoon 22 years ago to Spain, we bought things in Spain at like, I think it was 70 cents on the dollar for the US dollar. It's not approaching that right now, but it's gone from $1.40 or almost, 180 to parity. And that's a massive slide against emerging markets and international as well. So it's facing there's currency risk, there's stock risk, there's market risk, there's interest rate risk. So when you hit international or emerging markets, there's like 5 or 6 types of risk, but I want to make sure that's a good one to show as well. One thing I wanted to say too, Zach, and that was wonderful, is it's times like these. You said that several times. There's a song I was literally just listening to by the Foo Fighters called Times Like These. And it's in times like these we learn to, and then I blank. So we learn to be patient. We learn to live again. We learn what's important to us. If you were celebrating the markets and you celebrate when they're up, learn to do something different. This is tough times. This is what we go through. Find something that makes you happy. Don't watch CNBC. Don't lament in the market every day. It's a stew that you create that's sour. It's going to be horrible. Don't spend time on it. We'll get through it. We don't know when it will end. We just know that it will. And when it does, if you celebrate the market, celebrate again then. But I mean that. Just take a chance to look at something a little bit different as well. That's wonderful perspective, Zach. I really appreciate that. Before I head over to Ken, Ken's a dad, so I wanted to bring a couple of ideas here for him. Just for I think it's bringing a little humor into the day. I usually will give you some dad jokes, and it is fall, and we love the time for farmers. And in Iowa, this is a big thing. I guess the question really comes is, what do farmers wear under their shirt when they're cold? They wear a harvest. At any rate, the one is as well as so trees are actually starting to log in together now. They're starting to get on the internet, which is kind of interesting. How do trees get on the internet? They just log on. Last one too is, what can a whole apple do that a half apple can't do? It can look around. So with the perspective idea, I thought that was kind of funny. Some of those are really dumb, I get it, but I think they're great sometimes for little kids because they go, what? You got to explain it. Anyway, Ken, why don't you bring us some planning points that we need to look at right now with what's going on in the markets?
Yeah, I appreciate that, Chris. Thank you very much. And those are some good dad jokes you have there, and brings a smile to our face, which is good. So really, I mentioned the fundamentals a few times, and this is the time where it's not fun, like Chris mentioned, but we need to take a deep breath and just slow down and focus on the fundamentals of what we're doing. When it comes to your plan, if your overall plan hasn't changed, we shouldn't change. Like this is the time not to make massive changes when there's a lot of uncertainty. Now, we will go back to the fundamentals, and the fundamentals are rebalancing. When we talk about that, we say that a lot, but it's a very meaningful thing at this point in time when the markets are where they are right now. This is what Zach was talking about with the small and mid caps. We're rebalancing, and we're actually buying more shares of those categories as we go. That's what rebalancing does. It puts us in a great position. What we do today, we'll feel that whenever this ends. I don't know when it ends, but we'll feel the glory of that. We'll feel the victory of all that when we do the fundamentals correctly. I can't tell you how many conversations I hear when I'm just around. I'm the financial planner guy of our friends, right? So everyone's like, hey, what do you think the markets are going to do? You think we should do something different? We think we should put money over here. We think we should put money over there. Everybody's getting a little frantic right now because of the uncertainty. Now is the time to take a deep breath, focus on your long-term plan. Our goal is to make sure that you have a rising amount of income in the future for your 30-year retirement. That is our overall goal, and we will continue to hit that goal as long as we focus on the fundamentals. So focus on contributions if you're in that phase right now. Focus on buying more right now. This is the time to make hay based on the farmer's joke we just heard, right? This is the time to.
That was funny. I like it.
This is the time to take a look at your spending. Now, no one wants to stop spending. That's not fun. But if we take a look at our budget and we say, hey, maybe there's a few categories where we could trim back for the time being, this is the great time to be doing stuff like that. Focus on the fundamentals and the rest will take care of itself. So just want to keep the message short and clear today on the fundamentals. On a more complicated topic, inherited or beneficiary IRAs, guys, there are so many rules that are changing in this area. We actually had to go back to our experts twice now just to clarify some rules that came out. This is a complicated. So not only when we lose somebody, because if we're inheriting somebody, that means we lost something. We lost somebody. Not only are we grieving, there's also a myriad of rules and regulations that we have to be aware of. We're aware of those for you. But again, that's a very complicated thing about inherited IRAs and beneficiary IRAs right now. So we will help you through that. That's not an easy time to be going through. We're here for you. And just want you to know that we have a keen eye on those rules because they are very, very complicated right now. So with that being said, I'll hand it back over to Chris.
Thanks, Ken. I appreciate it. I appreciate that as well. And we can get very technical with some of this. If some of you want more technicality with tax law, tax planning, we'll get into that with our fall forum. Our economic forums, we enjoy doing more detail. This is more to keep it light, but just to give you some of the issues we're seeing and going around. Right now, too, I use fall, and a lot of my clients have talked about this, as a time of reflection. This is a great time to reflect on what's important to you. And I mean this, and you've heard it before, but I really mean this. Take a moment to look back and say, listen, if all else was peeled away, this is what's most important to me. Hopefully it's not money. It's typically what money supports. Good time of year to reflect on that. Take some time to go through and do something about it. One thing that somebody recently asked me is, they actually asked me to do my own eulogy, to write it down. And it was an exercise we did. I said, well, what do you mean my own eulogy? I said, well, who do you want to be at the end? And then more importantly, they asked me one more question. They said, I want to be this, that's great. What are you doing to get there? And I thought that was a phenomenal question. That one has kept me at it for weeks, looking at, what am I doing to get to where that is? So I've just finished reading a book by David Goggins called You Can't Hurt Me. Actually, I listened to it. He swears a lot, so I don't recommend it to anybody who's a faint of heart. But Zach read it many years ago, and I understand it as well. It's called something about callousing the mind. If you are very, very hurt by markets going up and down or by something, working on callousing the mind and getting through tough times like this are extremely important. So I want to give you that advice as well, as work on callousing the mind at times like these. It is times like these that we learn to get through. It's times like these where your planning becomes extremely important. It's times like these where you become successful in the future by doing something nobody else is doing, which is staying put and doing the right thing and rebalancing and buying things. One of your categories we didn't even mention is up 39% this year. So for those of you who have low core, which is most all of you on this call, you've got an asset class that's up almost 40% in a market that's down 20 something. So we've got categories to rebalance. We've got places for cash. I just want to make sure I remind you of that as well, because sometimes it seems like it's all gloom and doom. We have bonds as well. So again, I just want to make sure bonds are actually down in the same year as stocks, which is what happens in inflation oftentimes when rates go up dramatically. It's the worst fixed income market that anybody who's on this call right now can remember ever. Okay, so I want to say that one more time. Worst fixed income market since 1842. I don't think anybody in this call was born there. Maybe one or two of you were born near that, but I don't think anybody's 158 here yet. Maybe that'll be in the future. Before I go, though, I'd like to talk about the happenings that are going on. Even better, I'd like to have Jenny come on and talk about the happenings that you should pay attention to at Gentian here over the next few weeks. Jenny, take it away.
Thank you, Chris. So right after this fall forum, we are going to be heading into our Ladies in Gentian workshop. These happen bi-monthly, and today we're going to be talking a lot about purpose. So we're excited about that. We have our forums coming up next week. Tuesday, we'll be at the Best Western Bridgewood for our Appleton guests. And then the same content will be presented on Thursday, which will be at Blue Mound Golf and Country Club. So if you haven't registered for those, you still can. You would just need to get to your bulletin and click the RSVP link. Bi-weekly update, next one will be October 12th. They start at 9. And then we close out the month with our October birthday lunch. If you haven't joined for one of those yet, they're super duper fun. And if you're born in October, it's our gift to you. Thanks, Chris.
Outstanding. That was quick. Thank you, Jenny. I appreciate that. Well, I know we're at a limit today. I know we're limited today, so you don't have to endure me much longer. I know your faith, patience, and discipline are also often with me and my dad jokes and some of the things that we have as well. So I do appreciate those too. It's kind of funny though. I do have one last one. How do you fix a broken pumpkin? with a pumpkin patch. With that, everybody head out to the pumpkin patch with your grandkids, with your kids. Enjoy it. Gather apples. Do the things that fall brings in the harvest, the plentiful that comes in. The market may not be offering us bushels fulls of great returns right now, but there are plenty of things out there to harvest, to eat, to gather, to please go out and take the plethora and the abundance of those things as well and enjoy them. More importantly, those are the things I think that to focus on. We'll do our job here and continuing to look at planning for you, looking at markets, making sure you're paying attention to things you should be. With that, I want to tell you from Chris Doty here at Gentian and our Gentian retirement, we appreciate the planning of the planet, live it and give it for you. We are here for you whenever you need. We'll continue to be proactive. We're constantly looking at your plans and your investments. We're not going to bother you with things you don't need to make decisions on. So I want to make sure you understand that as well. We are here, continue looking at everything that you have. I want to thank you for all of you, for your faith, patience, and discipline, for working with us, for being on the webinar today, and most importantly, your time. Your time is precious. Use it wisely. With that, until 2 weeks from now, thank you.